One of the biggest expenses to prepare for during retirement is taxes. There are taxes on your 401k, there are taxes on your home, and there are even taxes on the earnings from your savings account. What if there were a way that you could grow your money to millions without having to pay a cent in taxes? Well, there is. The Roth IRA is one way to do this. If we had known about this sooner, we know we would have been years closer to our retirement. In this video, we're going to cover everything you need to know about the Roth IRA and how you can build your millionaire status without having to pay a dime in taxes. Stay tuned. Hi guys, I'm Cece.
And I'm John.
Welcome to our channel Millennial Fire, where we give practical tips on reaching financial independence and early retirement. And if you've been enjoying our content, please hit the like button, and if you haven't already, please subscribe because that really helps us out.
So, what is a Roth IRA? Well, let's break down what an IRA is. IRA stands for Individual Retirement Account. And long story short, this is a special type of account that allows you to have specific investments in stocks, bonds, mutual funds, index funds, etc. And it allows those investments to have specific special tax benefits. So there are two types of individual retirement accounts. The first is a traditional IRA. In this account, the tax is deferred until 59 and a half as of the posting of this video. And once you start to withdraw after 59 and a half, you have to pay taxes on that sum of money that you withdraw from this account. And then you have the Roth IRA. This is an account that is tax exempt. So you fund this account with money that's already been taxed. So whether it comes from your paycheck or side business, and you put that money into this account and it gets to grow completely tax-free until the age of 59 and a half, where you can withdraw it and not pay any taxes at all. So like we were saying in the intro, if you're able to grow this account to $1 million, you can grow it to $1 million, reach 59 and a half, and pull out $1 million in cash and not have to pay a dime of tax at all. So to fully grasp how powerful a Roth IRA is, we have to understand that this account is able to take full advantage of compound interest. Compound interest is an investment that gains interest that builds upon itself to gain even more interest. So it's like investing $1 and then that dollar makes $2, and now those $2 make $4, and then that $4 makes $8, and so on and so forth. Let's take a given scenario of a 21-year-old who has made the dedication of investing $75 a week, which would be around $3,900 a year, into index funds. In index funds, you can expect around a 7% return, give or take, over the course of your investment. This 21-year-old commits to his investment and sticks to it, invests $75 a week up until the age of 65, and now his investment has grown and is now a value of over $1 million. But if this person waited just 1 year, so he didn't start his investment at the age of 21, he starts it at the age of 22 instead, and invests $75 a week, he would lose over $71,000 in value in his investment. This is why compound interest is so important, and that's why it's so important for you guys to get started investing today if possible. You don't want to miss out on these opportunities, because every day that passes is possibly interest that you're losing in your investment. So why are we so excited about these Roth IRAs? Like we said, they're tax-exempt accounts. And I don't know if you guys get the gravity of how amazing that is. So let me give you a quick example. So let's imagine hypothetically that we have a Roth IRA and we also have a traditional IRA account. And that we're able to grow the value of both of these accounts to $1 million each. At the age of 59 and a half, for whatever reason, we decide that we want to withdraw all of the money from these accounts. Please, by the way, guys, if you do get to the point where you grow this amount of money in your IRAs, please don't withdraw this amount of money without a plan for your money. We get to the point where we want to withdraw all the money from these accounts. We withdraw the $1 million from the Roth IRA, and we literally get a check for $1 million to withdraw from this IRA. We have $1 million in hand. That's every dime of it is ours. Inversely, if we go to the bank and do the same thing with the traditional IRA, we will get $1 million check, but that $1 million check comes with a tax bill. And the tax bill here in Florida for that will be around $360,000. So instead of looking at every dime of $1 million, you're more like looking at $640,000. So that's the difference of $360,000. Don't know if that's not a big number to you, but that's really huge to us. So this isn't to say that a traditional IRA is a bad investment. You just have to know how to use it properly. There's ways to get around these tax bills that you will owe. But for face value, the Roth IRA has no taxes at all for their investment. The second thing that makes this account so great is that your investment is your money. This might sound a little strange because, of course, anytime you invest, you feel like it's your money and you can do with your money whatever you please. Well, with other retirement accounts like 401ks, 403bs, traditional IRAs, once you put the money into that account, getting that money out generally comes with tax penalties and a tax bill. But with a Roth IRA, even before the age of 59 and a half, the money that you've contributed, you can pull it out at any given time with no tax fee, no tax penalty. So, in an example of saying that we contribute $5,000 a year and we've done that for 3 years straight, that means we have $15,000 worth of contributions. And in year three, for some reason, something went really, really wrong. Something unexpected happened in our lives. It depleted our emergency fund. I can go to my Roth IRA and withdraw $3,000 and not have to pay any additional taxes or any tax penalty on that. That's another reason why this account is so great. Yes, please invest in your emergency fund first, but this is something that can be used to supplement your emergency fund in case things really go the wrong way and become really unexpected.
And that really should be your last resort, because although you're able to take everything out that you put in, you can only put into this Roth IRA the max for the year. So no matter if you take $15,000 out or $5,000 out, the most you could ever put back in for that year is $6,000. So,
As of 2020.
As of 2020. And all this information that we're giving today is as of the tax laws for 2020. So how do you invest in a Roth IRA? First, you want to make sure you meet the criteria. The IRS uses something called your modified adjusted gross income to determine your eligibility to contribute to a Roth IRA. And for some reason, it's not listed on your tax return, but what is listed is your adjusted gross income, and you can use this number to calculate your modified adjusted gross income by just adding a few things back. We're gonna put in the description a link that to show you exactly how you can calculate your modified adjusted gross income and see if you qualify. And we have a chart that shows you the different categories of income to show if you're qualified to make a full contribution, a reduced amount, or no, if you don't qualify at all. Luckily, even if you don't meet the income requirements, there is a loophole called the backdoor Roth IRA that can help you be able to take advantage of a Roth IRA even if you make too much money. After you've determined your eligibility to contribute to a Roth IRA, the next thing you need to do is just pick a brokerage to open a Roth IRA with. So there's Charles Schwab, Vanguard, Fidelity, and our personal preference would be Fidelity because in the research that we've done, it seems that they have the lowest fees, lowest expense ratio, and $1 minimum balance to open an account. So if you're just starting off, you don't have much money to open an account, you can open it with $1 down. So now we're going to walk you through how to open a Roth IRA with Fidelity.
Okay, so what we're going to do first is go to www.fidelity.com, and if you've never been logged in before and you don't have an account, you'll be brought here. We'll go to open the account, and we're going to select Roth IRA. And if you're already a Fidelity customer, you'll click yes here, put in your username and password, and it'll automatically fill out all the information you need, and you'll jump right to the next step. But in the case that you're not, you'll select no, and then you'll fill in all of the information in the prompts that follow. After you do this, you're going to be asked to link a bank account. And at that point, you'll link your bank account information. Once that's done, you'll be able to come to this page here. And we'll see where our money is being transferred to. We're transferring to our IRA. We're going to select the year that we're contributing to. At the current point of this video, we're able to still make contributions for the 2019 year because the contributions that you make are based on the taxed year, which usually ends in April, but due to the current climate that's going on, it's been extended to July 15th. So you could still add $6,000 for 2019, and then after July, add another $6,000 for 2020. Well, you don't got to wait till July. You could do that now as well. But we've already funded our 2019 IRAs completely, so we're just going to fund the 2020. And some special points here. So we entering an amount of $10. They're going to ask for at least $10 to make the initial transfer. And then here, a special point, the contribution limits. So see that we have a $6,000 contribution limit in 2020 and $0 contributed to this date and another $6,000 of remaining contribution. A special note is that Tassina and I have already started funding our 2020 accounts, but we funded them with Vanguard. So you have to make sure you're on top of, if you have multiple IRAs in different places, that you don't go over that limit, because going over that limit could incur fees. So we're going to continue with the $10 transfer. And then this is the last step. We submit, and the transfer has been successfully submitted. So now what we're going to do is go back and actually make an investment with this account. So this is a very, very important special note. Remember, the Roth IRA is an investment vehicle that holds investments that gives those investments tax benefits. So within a Roth IRA, you invest in index funds, ETFs, stocks, and things like that. If you don't invest, it's basically a very, very small yielding bank account that your money is sitting in. And we recently read a book called Choose FI, where there was a lady that thought she had been properly planning for retirement. She funded her Roth IRA, but realized she didn't ever invest anything within the Roth IRA. And so her money barely grew at all. We don't want this to happen to you. So make sure when you put money into the IRA from your bank account, when you make this transfer, that you actually make an investment into an index fund or some bonds or something. So what we're going to do now is show you where you can look at your investments. The investments that we recommend are index funds. Index funds have very, very low fees, and some of them have zero fees, and they function based off of the market. If you have any questions about how index funds work in more detail, please check out this video that's in the top right corner now. So what we're going to come and do, press see results, and then we're going to choose Fidelity funds only, and then index funds. And then you can see the list of index funds, and you can get more information about how expensive they are. So the expense ratio is what delineates how much money you have to spend to manage this. Once again, this is covered in our index fund video. So once we make a selection of what index fund we want to invest in, we're going to come over to accounts and trade. We're going to go to trade. We're going to choose the account that we want to make a trade for. And then we're going to come and type in the symbol. And today we're going to invest in VZROX. The reason why we're going to invest in this account is because it's a zero commission base and a zero expense ratio index fund that covers the entire stock market. So it's a really, really good investment. So we want to take a moment to give a quick disclaimer that we are not investment professionals or financial advisors. We are doing these videos purely for educational purposes because we feel that it's important for everyone to know what they're investing in. So please don't just go blindly invest. You do your own research as well and talk to other people to see what's the best options for you. So you can see more information about the index fund here. We're going to put an amount of $1 in, preview the order. We place the order, and the order has been received by Fidelity. I want to take a quick moment just to point out and say that I ran into a quick issue with this. Right now, it is 12:02 a.m. in the morning. I called Fidelity through the phone number that the site provided me, and somebody actually picked up. Not only did they quickly solve my issue, they told me that they're 24/7 support. And so that's just another great reason why we believe Fidelity is a great brokerage to go with for your investments.
So we hope you guys have learned a lot about Roth IRAs today, and we hope that we've convinced you guys how great they are and that you'll get started as soon as possible. And if you guys have been enjoying our content, please give us some likes And if you haven't subscribed already, please hit the subscribe button. And we hope to see you guys next time. Happy investing.
See you guys.